It would be the largest takeover of a U.S. company by a Chinese buyer. Let's talk to Greg Roumeliotis about this. Smithfield, Greg, being bought by Shuanghui, or Shuanghui as it's also known as. Right, so what's the biggest obstacle to this? It's a $4.7 billion deal. Regulations, I mean, we talk about KFC chicken in China. They've had the bird flu over there. So what do you think?
There is a government committee. It's a committee on foreign investment, which basically scrutinizes cross-border deals on national security considerations. In this case, it's
see the spike there in the stock.
Yeah, so it's interesting to know that. So basically,
yeah,
it shows you what people think about the deal. So the offer is at $34.
Yeah.
The share is now trading at 32.5. So based on the pricing of the shares there, most people think that this will likely go through. So why do people think this? So if you think about it in terms of national security considerations, these guys are not going to be bringing meat from China.
Mm-hmm. We got plenty of pork here. This is a big pork company.
Absolutely.
A lot of household brands that you know, Armour, Farmland, healthy ones.
That's right. And a growing middle
pork.
class in China that loves pork. So they want, U.S. pork over there.
So we're going to send it over there.
That's what's going to happen.
Yeah.
Now, arguably, one could argue, well, China doesn't have the best food safety record. In fact, the company there was involved in a big scandal a couple of years ago. Are they going to bring the same practice here?
Yeah.
This Chinese company would argue no. One could see that only being the possible argument against this deal, so we'll have to see. But most people think that now, because it's not a major sensitive sector. It's not defense. It's not a strategic sector.
Take
for
a
the
look
US
here.
economy.
They like it so much that it's pulling everybody else up. Tyson Foods and Dean Foods up as well.
Right.
If only just a bit there. Dean under 1%. Not so bad.
Absolutely.
Under 1% there, and also a food ETF I think is popped a smidgen as well.
Well, it came as a complete surprise, right? So they had a shareholder, Continental, that was pushing basically to break up the company, but nobody saw this coming. In fact, our sources told us that because those two companies were doing business, talks started about 3 months ago and kind of like culminated to the deal we saw today.
So it started 3 months ago, but still nobody really expected this to come through today.
No, it came as a big surprise today. Yeah, absolutely.
All right, but it looks like it's going to happen.
Looks like it, yeah.
All right, Greg Roumeliotis, thank you so much. We're going to take a look at markets today because after the good news yesterday, we were up, and let's see what we're doing because we've been hovering down about, you can see, we're just under 1% there. The Dow's dropped 125 points. The big picture worrying is the Fed, but the high yielders are what are selling off Broadway. Yeah, they're selling right off Broadway onto Wall Street. Taking a cue from the bond market, last look, only two stocks in the S&P 500 with dividend yields of 3% or more were up on the day today. High-yielding sectors like utilities and telecoms are leading the day down today. And also, as a side note, let's take a look at real estate because we've got some real estate ETFs here that are both down on the day. You see both of them down nearly 3% and 2% there. And as a further side note, you may have seen the breaking news that shareholders at the Empire State Building have voted to IPO the Empire State Building. That's kind of been a long time in the process there. They voted to actually go through with that. Selling off today, though. Is the timing right on that one? I don't know. We'll have to wait and see. All right, I'm going to move to the hot spot. And as I do, remember to check out those snaps at the bottom of your screen for more headlines of the day. Facebook, at last look, was down 2%, 3%. We're going to show that. Why are they down? Well, they've admitted that they've had some trouble curbing hate speech. You can see the stock there at $23, falling farther from that IPO of $38. They've had trouble curbing hate speech, and there was an open letter from a group called the Women Action and the Media group, and they urged the company to improve response to content that, quote, trivializes or glorifies violence against girls or women. And after this came out in an open letter, British Media Week reports that 13 advertisers pulled their ads from Facebook. So you can see that the stock is down today. So why don't we take a look at the Zuckulator and see what's going on there. And he's down to 11.8 with that stock price at 23.62 on that news. And finally, headlines today that Sallie Mae, the largest student loan company, is splitting into two groups, the education and loan management business and the consumer banking business. Now, the Federal Family Education Loans Program, under which private lenders made student loans backed by the government, that ended in 2012. So these companies like Sallie Mae have focused more on the private lending business, and the education loan management business will hold the bulk of that. As you may know, student loans in this country, huge default rate, student loans, outstanding student loans, are hovering near the $1 trillion mark. So they're hoping that breaking this company into those two separate unions will help things out in Sallie Mae. And today, they are actually the biggest gainer on the S&P, and you can see the stock up there. That does it for us. Remember to follow us on Twitter at Reuters Insider. Get more great videos, Reuters.com/Reuters TV. I'm Lisa Bernhard. This is Reuters.